Good morning, traders, and welcome back to Alpha Market Meridian, your daily, unfiltered guide, keeping intraday moves contained. For the pound, the bow's neutral stance adds to the calm. No surprises expected from UK data today. Third, risk sentiment. Global equities are flat, oil is steady, and safe haven demand is muted. No risk off panic, no risk on euphoria, just neutral sentiment that keeps non-dollar currencies, the euro and pound, in check. Put simply, today is a range trader's market, until a breakout occurs. Our job? Identify the lines in the sand where buyers or sellers will take control. Let's start with EUR USD. EUR USD is the most liquid pair in Forex. Current price, as of London Open, sits at 1.1714. Let's define today's intraday range first. The high and low we expect unless a breakout triggers. EUR USD intraday range for April 29, 2026, runs from 1.1675 to 1.1750. This is our no man's land. Inside this range, we trade mean reversion. Buy dips to support, sell rallies to resistance. Only when price closes outside this range on a 1-hour or 4-hour candle do we shift to breakout mode. Now, let's break down the key levels. Non-negotiable zones where price will react, reverse, or explode. First, core support levels for EUR USD. Primary support lands at 1.1675. This is today's floor. 1650. Secondary support sits at 1.1650. A key psychological level and recent consolidation low. Only a break and close below 1.1650 invalidates the short-term bullish bias and opens a deeper drop toward the 1.1500 to 1.1550 zone. Next, core resistance levels for EUR USD. Primary resistance is at 1.1750, today's ceiling. This level marks a cluster of recent swing highs and the top of the current consolidation range. Rallies into 1.1750 will face aggressive selling pressure, making short entries at 1.1750 the primary play for range traders, with a stop loss above 1.1780. Secondary resistance bands 1.1780 to 1.1820, a critical supply zone for sellers. A firm break and close above 1.1820 signals a confirmed bullish breakout, with next upside targets of 1.1900 up to 1.1965. Notice the RSI reading right now. It remains neutral with no extreme overbought or oversold readings. That's classic range-bound market behavior. No strong directional momentum, just steady back and forth price action. Now, what will break this tight range? We have two clear scenarios, a bullish breakout to the upside, and a bearish breakdown to the downside. Let's break down both fully, including above 1.1820, paired with rising trading volume. This confirmation signals the all-clear for bullish momentum and long positions. Our staged upside targets start at a first target of 1.1840, the 5/8 Murray level. The second target lands at 1.1900, a major psychological level for the euro. Our third and final bullish target is 1.1965. The most recent major swing high for EUR USD. Breakout invalidation occurs if price drops back below 1.1750 after an initial breakout. This signals a fake-out move, and traders should shift back to short positions to trade the established range once more. Scenario 2. Bearish breakdown below 1.1675 leading toward 1.1650. The breakdown trigger is a 1-hour candle closing below 1.1675, followed by a retest of 1.1675 acting as new resistance. With no bullish bounce back above that key floor level, bearish confirmation triggers on a decisive break below 1.1650 alongside rising selling volume, confirming full bearish control over near-term price action. Our staged downside targets begin with a first target of 1.1580, a previous consolidation low. The second target is 1.1506, the 3/8 Murray level. Our final bearish target rests at 1.1500, based. No guesswork, No emotional trading, just structured market analysis. Now, let's shift our focus to pound sterling to US dollar, also trapped in a tight intraday range, with its own unique key support, resistance, and breakout triggers. GBP USD, commonly known as cable, carries higher intraday volatility than euro to US dollar but remains equally range-bound for today's session. Current market price sits at 1.3500. First, let's outline today's official intraday trading range for cable. GBP USD intraday range for April 29, 2026, extends from 1.3475 to 1.3550. Once again, this defined zone is our core range-bound trading area. Inside these boundaries, we buy price dips and sell bullish rallies. Only once price breaks and closes outside this range will we shift our strategy to follow the new breakout trend. Let's cover cable's most critical support and resistance levels, the key zones where price will almost always react, reverse, or accelerate. First, core support levels for GBP USD. Primary support is firmly set at 1.3475, today's immediate floor. This level is a confluence of yesterday's session low and a short-term rising uptrend line. Price already tested this zone during the Asian trading session, with a strong bullish bounce confirming solid buyer demand. Range traders can buy dips to bullish bias, opening extended downside toward 1.3375. Next, core resistance levels for GBP USD. Primary resistance sits at 1.3550, today's hard ceiling. This level marks recent swing highs and the upper boundary of cable's current consolidation range. Bullish rallies into 1.3550 will attract heavy selling pressure, making short entries at this level the top play for range traders, with a stop loss above 1.3600. Secondary resistance runs from 1.3600 to 1.3625, a major supply zone for pound sellers. A sustained break and close above 1.3625 confirms a full bullish breakout for cable, with the next major upside objective at 1.3765. Cable's RSI is also showing neutral readings right now, creating perfect conditions for range-bound price action. Next, we'll map out GBP USD's two key breakout scenarios, bullish and bearish, complete with entry triggers, confirmation metrics, and clear price targets. Scenario 1. Pound sterling to US dollar bullish breakout above 1.3550 leading toward 1.3625. The breakout trigger is a 1-hour candle closing above 1.3550, followed by a retest of 1.3550 as solid support. With no lasting drop back below this key level, bullish confirmation arrives on a break above 1.3625 paired with a clear volume spike, confirming full bullish. Control of cable's near-term trend. Upside targets include a first target of 1.3650, a near-term swing high resistance point. The second target is 1.3700, a widely watched psychological level for the British pound. Our third primary upside target is 1. .3765, the key long-term, tailored for both range traders targeting high-probability small gains and breakout traders seeking larger trend-driven targets. For range traders focused on high-probability and smaller pip targets, EUR USD traders can buy dips at 1.1675, with stop-loss placement below 1.1650, and a take-profit target at 1.1740. For short trades, sell rallies at 1.1750, set your stop-loss above 1.1780, and target 1.1680. GBP USD range traders will buy dips at 1.3475, stop-loss below 1.3440, with a take-profit at 1.3540. For short entries, sell at 1.3550, place your stop-loss above 1.3600, and target 1.3480 for breakout traders willing to take slightly higher risk for larger trend-based returns. For Euro to US dollar, wait for a confirmed 1-hour close above 1.1750, then enter long on a clean retest, with primary targets at 1.1820 and 1.1900. For bearish breakouts, wait for a 1-hour close below 1.1675, enter short on retest, and target 1.1650 and 1.1580 for pound sterling to US dollar. Wait for a 1-hour close above 1.3550 before going long on retest, with upside targets at 1.3625 and 1.3700. For downside breakouts, wait for a 1-hour close below 1.3475, enter short on retest, and target 1.3415 and 1.3375. Remember this critical non-negotiable rule: no trades before full confirmation. Never anticipate breakouts in advance. Always wait for the candle close, the retest of the key level, and clear market confirmation. In Forex trading, patience equals long-term survival. Above all, prioritize strict risk management at all times. Risk: no more than 1% of your total trading account on any single trade. Stop losses are mandatory and non-negotiable, and you should never remove or widen a stop loss mid-trade. Today's market conditions are calm and muted, but it is essential to remember that low volatility and quiet range action always precede sharp spikes in market volatility. Stay alert and fully prepared for a breakout at any moment. That wraps up our complete market breakdown for Wednesday, April 29th, 2026. Euro to US dollar and pound sterling to US dollar remain locked in tight intraday ranges, with clearly defined key support and resistance levels and fully mapped breakout scenarios for both bullish and bearish outcomes. Trade the established range until a confirmed breakout takes hold, then follow the new trend with disciplined execution. No hype, no guesswork, just hard data, strict trading discipline, and a proven market edge, the Alpha Market Meridian way. Before we conclude today's session, please review our mandatory disclaimer. This content is for educational and informational purposes only. It is not financial advice, investment advice, or a direct recommendation to buy or sell any financial instrument. All forms of Forex trading involve significant inherent risk, and past market performance is not indicative of future price results. Always trade at your own responsible risk. Thank you for watching today's market analysis. If you found this breakdown valuable and actionable, please like, subscribe, and hit the notification bell to receive daily Forex market insights every trading session. Drop a comment below to join the conversation. Which breakout scenario are you monitoring most closely today for Euro to US dollar and GBP or USD? This is Alpha Market Meridian. We'll return tomorrow for our next daily Forex session analysis. Until then, trade smart, stay disciplined, and always protect your trading capital.